review your BNC, they will be very okay. So, questionnaires, a 3 to 5 year financial projection is the end of this week. That's the activity for the end of this week. Your 3 to 5 year financial projections. That's at the end of this week for you to move to. So if these 21 of us are going to move to week 3, it will be that you have your 3 to 5 year financial projections. Yeah, that's the take-home activity. So start now. If you want the Excel, explain. We'll give you Excel. So we're going to roll the Excel out today, tomorrow, and you can start speaking to it. And then 1 or 2 facilitators will be coming in on Wednesday and on Friday, both in the area of finance, right? Auditors, they are both auditors. Okay, so one is a lady and is offering to offer auditing services for us for very discounted prices. All right, so please come in here Wednesday because she said she's able to do between 12 and 1 to just about, so 2 hours she has to be. So we're starting 12 on the dot. Okay, so Wednesday here.
Yeah, physically.
No.
Online.
Yeah, but if you want to come in to ask questions or a bit of unholding, they are open office hours on Mondays and Wednesdays. So you can come in here before 12 or you wait when we're done after 3 p.m. Office hours is open. So for the next class we will have together will be at Microsoft Office. So that's free for everyone, whether you are on the cohort or not, or you just want to be part of this thing at Microsoft. But for those on the cohort, there's advantage. Yes, they are promising to build websites. I think they should be taking a session on Wednesday or Friday, just to introduce us to what, is it this week or next week? Please confirm. All right. So what are the questions? What is your current revenue or income? We need to know. Or projected revenue or income. What is it? Please do it in days, in weeks, in months, and then annually. What is your projected income or revenue? Current one. Whether you are running your business at 0 or at $1 million is fine. Just give us projections or what the actuals are. What it is right now or what it could be when you start. Yeah. Yes.
So for this year,
we are going to write projected 3 to 5 years. So we need your current, what it is now. You get it?
from January this year or from this month.
Can we have 3 to 5 years projections for you, and you want to go to an investor today? How much are you earning today? Currently, how much?
6 million.
6 million? Good. So just write 6 million. It is in your past projections. We will look at your previous and see if that your 6 million aligns with where you're coming from. But we want to project from now to where you're going. For this course. Gross income. Gross income. Yeah, gross income. Gross revenue, please.
Let's say for the month of March, February, for the month of March.
Yeah. Let's even say you start from January 2025. Let's see what your income looks like.
For a business that is mainly a B2B, how do we, so we sell, our retail end is small.
Okay.
So we sell more B2B. However, their money does not come in every day. They can, we have customers that make orders once a quarter, but they make their orders, maybe 100 kg, 200 kg, and all that. So for companies like that, how are we going to make that projection? Because
How are we going to make that projection? Because the money is not coming like on a daily basis. It's only the small retail end that comes in.
Where's your writing pad? I'll tell you what to do. Because what I'll tell you to do is a bit complicated. I thought I would have my fix. I have my handkerchief. And then, okay. We have the picture. Thank you. Right, so for the purpose of this investors that we're trying to reach, they want to see your quarter, your daily, your quarter, because you are expending money every day. So even if the money is coming per quarter, do going forward. Most times you are doing this because money is coming. You are increasing your capacity, which is why we're seated right. So if I give you 500 million naira, for example, projects, if you don't get 500 million naira, still give us a projection of what it will look like. If it's going to remain the same as where you are right now, say remain the same as where you are right now. Did I lose you? Okay, should I repeat? Yes. Okay. So what I'm trying to say is, the first question is, what is currently, what are you doing right now? What are you earning? It's from what you are earning, which you actually project where you are going in terms of projections. Now, one side they will give you Excel, you just fill it, right? I'm teaching you how to just use simple maths to mentally work your financials out by yourself. So, question I'm saying is, there are two categories. From where you are earning now, you can project that based on whatever indices it is that is rolling in your head, I will maintain this same amount of revenue from my number one question, projecting into my future. If that's your case, it's okay. That's your projection. Your projection is you are maintaining status quo. But there's another projection that says I'm moving from 6 million to 9 million in revenue. That's different. As against saying we will maintain 6 million in the next 1 year, 2 years. There are organizations like that. They cannot earn more than they've climax, or that's their that's where they are. They're not going to go beyond that. So it doesn't go. No, so just put it there. If I need to write it out, no, it's not necessary for them. They will be fine. Yeah, they will be fine. So for online, it's not every time we can do this, so you can only try. Right. So did you get it, man? Yes. Okay. So I need to be quick so that we get out of this place. I don't sweat. So when I do this, that means that the weather is bad. What are your projected expenses for the next 3 to 5 years? Projected expense. What are your projected capital expenditures? Something that requires assets to be bought, major things you have to buy. Write it down for the next 3 to 5 years. You have any debts you are going to pay back? Please write it down. What are your projected debts? Are you planning to take a loan after this session? Are you trying to get grants? If you are taking grants, you probably are not paying it back, but you're paying it back in kind. Then you can expand on this question. If I take a grant, how do I show the grants people, the people that gave me grants, and I did well with their money? If it's loan of 500 million that I'm collecting, how am I paying it back? What is the amount? How will I pay back in 3 to 5 years? You know, if you know your projected income and know your projected expense, then you know your total debt. Then you can project how much you are repaying back. That's all your financial analysis is answering to. Simple as ABC. Okay, all right, so what is your current cash position? How much do I even have as cash? And they say cash flow. How much do you even have in the one that is not flowing out yet? How much cash do you have? You know, when you check your audited financial, you see cash in bank or cash in hand. How much do you have? That's what it is. Simpler. Yeah. How much do you have now? What's your current cash position? How much? If it's 10 naira, just write it there, 10 naira, because it has implication for the 5 projections. Or if you have cash, that means that you can execute some things in the immediate. If you don't have, it means that you have a negative cash balance. Your business cannot succeed or survive. So we must be looking for something else. So these are all cash flow analysis. Where is your money going? The roundabout of it. That's the beginning of this conversation. What are your projected cash flows for the next 3 years? How is money going to be moving around in this your business? Is it moving to investments, activities? When you earn money, are you using it to pay salaries? As operations, are you using it to buy electricity? How is money that you earn? If you earn 6 million, how is that money being spent? How is it being spent? Because any money a business makes is supposed to go around in 3 different dimensions under cash flow analysis. Operating activities, investing activities. What's the third one? Financing activities. So are you using 6 million to pay debt? Then we are in trouble. Sorry, I'm using your 6 million. So that helps you, right? So if you are weighing 20 million and you are making 6 million naira, then you have a debt of 30 million. We need to find something quickly to do to the business. Especially if the business does not increase in income or reduce in cost over a period. Please don't let me lose you. This is where people sleep or doze. I do not like people dozing in my class. So I make sure you don't doze by the way it is delivered. Simple. So that when you give the result, when we give you Excel, you will just put the number, the thing will calculate itself. The Excel you will get, it will just calculate it. You're like, it will just draw all your financials, it will just give you all the valuations. So just get me these figures. So when we run the Excel, they will run the Excel on Wednesday. Maybe on Wednesday or on Friday. Or maybe we'll take an extraordinary session on Thursday or something to run the Excel to ensure that we get the Excel. All of us you just see your financials you see how your cash flow runs. So the template makes itself with some inputs here.
We said that we keep this financial is our deliverable for the year.
Yes.
So if we give it to us on Thursday, It might be too late to.
Don't worry, don't worry, don't worry. You will get it today or tomorrow morning. And then maybe on Wednesday, we spend like 30 minutes on doing that. So that's a good point, right? Okay, so, what are your expected profit margins? On your own, sit down, you know, you have spent money, you've earned, you've projected what it will look like in 3 to 5 years, your expenses that you're going to spend, your capital expenditure that will bring you money. So if you're doing capital expenditure, that means that your income should go up. It could also mean that your costs could go down, because the machine that required, you've bought a machine that required 20 people to work, to run. No, sorry, let me put this right. You had 20 people working in a factory, but now you bought a machine that requires only 2 persons. So 18% salary is off. That could be a differential. Your loan will then be the one that is higher than your cost of running that business over a period. Did I lose anybody with what I said? You didn't understand. Those online, are you here with me?
I didn't get that far.
Yes, ma'am.
Please, if you are not
I don't
getting-
understand.
Please, where didn't you understand, ma? Is it what I just said about the cash flow or the profit margins?
The cash flow, the profit margin.
Okay, the cash flow and the profit margin, right?
Yes, ma'am.
Okay, so the projected
Ma-
cash.
I didn't understand from current cash position.
Wait a minute.
Current cash position.
I said the money you have right now, the money in your bank, the money at hand, the money you have in your hand right now, how much cash? Is it 6 naira, 10 naira? Money that is in the bank for this business. Your cash position right now. If they say we want to buy 1 million naira chicken today, do you have cash in your account to buy 1 million naira chicken? That cash, how much is it? Did you get that, ma'am?
Yes, ma. Thank you, ma.
So what are your projected cash flows for the next 3 to 5 years? How much money would you be spending? How is your money going out, in and out? How is your expenses looking like? What are you spending money on? Are you investing in something? Would you be using more of your money to run your business? Or you'll be using more of your money to run, what other activity is that? Finance, paying debts, or investment, or paying debt, or running your business. 3 things that accountants are looking for: operations, investments, finances. Finances means, what are you funding? Where is money going in terms of finances? Okay, so you are owing somebody, you need to service that loan. Or you have put some money in the company in treasury bills. We do that a lot here. So we make some money and we think that, okay, there's no need to spend it immediately. We just roll it into our other company to borrow it out to somebody, or invest in something, or we buy shares with it like we did last year and keep it there. So that's an investment or investing activity. We can decide that, okay, we're investing in one of the business in the women in DERA is an investment, and we take maybe 10% share, or they are returning some returns to us if it's debt. That is investment activities. When you're doing the operational activities, means that this money we'll be using it to run our business, buy diesel, buy that, do whatever you want to do. Is it clear, man?
Yes, ma. Thank you, ma'am.
All right, thank you. So the projected, the expected profit margins is when you have run around with all the costs and the cost of running the business, the cost of buying fuel, which are direct costs in some cases, and the cost of buying raw materials. Then you remove taxes. Yeah. Gross profit margin, that does not include tax. Net profit margin, you have removed the tax. But let's assume we are not even taking out tax right now. How much would you have remaining with you if you net out, if you remove all the costs of running this business or all the monetary requirements for running this business? I want to simplify, I don't use jargon. No. Let me be done. Yeah. Right. So that is the margins. How much is your profit at the end of this business? Then what is your current level of debt? I want to know how much you are even owing right now. How much are you owing? Projected debt is different from debt. Now, debt is the one I'm owing. A projection is they say I will get in the next 3 to 5 years to run this business. Current level of debt should have even come up before this one. Then what are your, okay, that's also repeated, sorry. Then what are your current assets and liabilities? Current assets and liabilities. Liabilities may mean somebody has paid you money and you have not delivered their products. How much is that? And it's good to know who they are, written by one side. Assets, current assets are stocks, shares, treasury bills, receivables that are outside, that are coming in. Money, even though by my own accounting, I don't take receivables. Any receivable that is more than 3 months, I just roll it into bad debt. It's not coming. If it comes, fine. Because that distorts the financials a lot and gives you a wrong picture of your business. But let's have it as it is for now. We can actually, what are the projected changes? I think that's the one that is there. What are the projected changes in assets and liabilities for the next 3 to 5 years? Who will be owing you? Who would you be owing? Good question, right? Then what is your current tax rate? You should know that now. What's the current tax rate? Do you pay tax? Do you make provision for tax? Really? You're not eligible. You should file for tax even if it's 0. So just tell us the percentage. We just know that your government has given you concession, no problem. But if an investor wants to see that you are credible. And the earlier you actually ensure that you are able to pay tax and survive, the better for you. It's not when it's 5 years, you realize that you just been running business without having a business. So what are your projected changes in market conditions that may impact your financial projections? What will impact your business? That's just what we are asking. What can in the next 3 to 5 years? In the next 3 to 5 years, an election will impact your business. Fluctuation in currency, inflation rates, either way, if it goes up or down, it will impact your business. What is happening globally? If Uncle Donald continue with the USAID, all the people that are looking for grants should be looking elsewhere. Yeah, more grants will dry up. And then there will be pressure in the VC markets. So funding squeeze, a lot more. It will be much more difficult to get funding because a lot of people has now been integrated into the fundraising pool. It wasn't enough before. The ones that are now getting grants, they are closing it down. So that's going to cause some problem here in emerging markets. Emerging markets, I'm sure you know what that means. Okay. So that is the summary of financial management for this business. Any other thing will be jargon. This is the basis of anything financials. When you know your revenue projection, that means you know how much you're earning from each customer and how much they pay you every day, every week, every month, every quarter, every year. Immediately you can account for a day, you can actually account for a year. So if you don't know how much you earn from your customers or what you will earn from your customers, there's no business. You do not understand your business. So some of you, when you are done with this analysis, you see that maybe you are not doing this business again. I've seen that happen. Because it will be clear to you that you are just wasting time. So there is no point. No, there are some businesses you need to leave or pivot out of. You must not sit on a business model that isn't working. Yeah, just change it or get out of it. All right, thank you. So if you have questions, let's have it coming. And this is the end of the session for today. We will send the Excel spreadsheet and then we will expect you to fill it and then we'll come back on Wednesday for balance sheets. There's a cash flow analysis I'll send to you tomorrow, the Excel spread. And then on Wednesday, we will have a guest speaker talking about auditing, balance sheets, P&Ls, etc., etc. And then we can go on to keep putting together our financials. Thank you, ladies, and well done.
Thank you.
So any questions here? Where's the mic?
Yeah. Okay, thank you very much, ma'am. So the question I want to ask, you said we should develop our projected income. So the question is, for a business that has different streams of income, so are we going to break down the projection for each of the business type, or we should just do it for overall?
So it's a very beautiful question, please. So let me give you an idea. So DealRoom, we have different ways we earn money. So we have screening fees. We break down that. Success fees. We break that down. What else again? Business plans.
Yeah, business plan. Deal making.
Deal matching, deal making. Okay, where's our banner? So these are 5 minutes. Deal making, deal matching, deal restructure, deal syndicate, deal advisory. We end on these 5 levels. If we now add DIRA into it, we are not earning money from DIRA, we're getting grants probably or support. DIRA is just to feed into some of the things we're trying to do here. So deal restructure here, if you have a loan that is bad with banks, we can help you restructure. And we earn 2% of that as the fees to help you do that. Yes, so if you have 400 million, like we had a client last year, 2% of that is to help you. And we restructured it so they had 1 year extra to 2 years to pay some of the major loans. Yeah. So the banks are actually stressing people right now. So we go speak the grammar with them. It's simple. We are helping you raise money. So that calm down. Don't take the assets because we need the assets for investors. Oh, okay, really, yes, they leave you. So we earn some money here. This one is, oh, I need investors. My documents are ready. Okay, we match you with investors. We add the deal matching, we screen you here. Once we screen you, we earn some fees. So we add it as screening fees. Then when we match and it's successful, you earn some money. Deal making, under deal making, we have all our business planning, documentation, transaction advisory, and some with legal. These are joined together, but slightly different. But you may not want that, you may just want advisory alone. This one we will advise and do. This one will tell you what to do and you will go. We earn fees for this, we earn fees for this. Deal syndicate is what we do with Adion Capital, where we help people who want to invest in startups or businesses manage, we'll tell them what to do. These are the store, these are the businesses, like some people that want to invest in women-led businesses. Okay, they put together like a syndicate, if it's a syndicate or whatever it is, but they're syndicating along the investments in the deal room. And a fee for doing that. So when you are doing your business plan, there will be 5 units or business units of deal making, deal matching, deal that. The Excel has provision for that. We will expand it so that you can put different. Yeah. So that way you are able to know which one of your business line. Like now in the deal room, our main focus is here. This is where our money is every time. Then a bit of here. We're starting to push this really right now. But you see this Boyani. Yeah, maybe not. So if we get 1 or 2 in a year, good for us. But when they come, they are heavy.
Yeah. Okay, ma'am. What with you on the financial, what if you have money that is being owed for a long time? How do you put that? Because it's somewhat supposed to come in and make up your revenue. But then by the time it stays for like 4 months, 5 months, it begins to dwindle in terms of value.
Women sweat, you know, and you don't.
So how do we put that and project? Because, okay, so one of the reasons why we scaled down on retail was because supermarkets were owing us and were not paying on time. So we had to pull out and we had to really scale down on that end because it wasn't making sense again. By the time you call them, go and visit them and all that. So we're now more of the B2B end because when it comes, it comes. Yes. So, however, the small that, you know, is still owed, maybe like a 500K, a 400K, 300K that is still being owed for maybe 3 months and all that. How do we put that in terms of, are they now receivables? And if they are received, I don't even know where to put it.
They are actually receivables.
But
But you may, they are already going into bad receivables. They are not going to come in. The standard is actually 45 days for receivables to come in. During the first or second session, I gave an example of a company we consulted for. And they were doing 2 billion turnover, but had about 400 million deficits, and we're doing receivables, and then we're doing 50 million OD from the banks to pay salaries. The people, when they will sell, just like you, the supermarkets won't pay 3 months, 6 months. That destroys companies. What we always say is, if you get your business model right, and you know that that's what will happen, you will take money that will store down into that and project that your revenue is going to come every 6 months or every 3 months. But your working capital can't be that money. If that money is your working capital, the company is bleeding, the cash flow is negative. It's not a bad thing if we know that the money will come in. The problem is when. Now, when is different from it will never come. I know Hubmart was owing everybody for a long time. And eventually they closed down. Some places, I don't know. Yeah, everywhere. So that was the problem. Again, I don't know why their model is like that, because they collect money every day. So it depends on their structure of their model.
But that's the same thing.
Yes, ShopRite will have the same thing. So question is the nature of the cash flow. That's why we do cash flow. It's the nature of that cash flow. The operational requirements for running a supermarket is very high. The financial people that built it should have made excess liquidity for operational activities over a period of 3 to 5 years and allow income or revenue to just be dropping into an account somewhere and run with this other cash flow. It's just a money problem. It's a financial structure that is not right. Because how do you, Walmart is still there,
Yeah.
and they're making a lot of money. Walmart has been there since forever. Yeah. So there are other ones in Nigeria that have been very sustainable. Which one? I thought that Dide was here to stay, but I don't know what's happening to them. It's gone.
So
So,
right now, you just Ibano.
Ebano. And then Ebano is the latest.
Yeah. But they're the ones that pay.
Yeah, because they I think they stopped their cash flow out of it. It cannot be the money they are using to pay you, they are using to run it. So for me, they must run as an investment, different from, so what if I run that business, I run my suppliers like an investment. So I know that 6 months is when I'll get my returns for 1 year, like an investment bank or a finance service company. And that's the thinking you two should bring to it. So you should make provisions for that shortfall in cash that will be trapped in receivables. That's why I said when receivables are more than 4 months, I just write it. I don't like chasing money, guys. But eventually they always come. But just, so the business model is run to know from the onset if this thing is going to go into bad debt, we don't do it.
But then how do you now gather the money to even serve the big?
That's what I'm saying, like, as we are deriving your financials right now, you make provisions for that 60 days shortfall and when your receivables come back. So what it means is that what you produce. So your inventory has to be stocked up. So when I do business models for your kind of industry, I will increase my inventory requirement from day one to cover 6 months to 1 year from day one. You see the difference? Means that I'll be asking for more money. And else that business will go away. If you don't do it, you will run into trouble.
It's an issue for us.
Yeah, it's going to be an issue. Because you are running your business based on income that comes in on a 1 month cycle. But that money is never going to come in till maybe after 3 months. So you still need to keep supplying them. You still need to, so you have to make provision inventory from day one. It's like school. Your students, your parents may say, "Ma, please, hey John, let me tell you what we did with our school once." The school is also in this program, but I think it works. So they ask parents to do checks, those direct checks. And so you pay. That gives a bit of cash flow. Because if not, the school will squeeze itself and squeeze. It has to, a school. It's like what you're trying to do, So you have 400 children, and the 400 children, they pay only once per term. Your risk is that your salary is there running for the next 3 months. Cleaner will come and tell you that the soap has gone up.
Yes.
The parents are paid in their head, whether they paid or not, they paid. Even if the money came or not, receivables. It's the same thing. So what do we advise schools to do? You must have a sinking fund that you tap into. That fund that the school is on its own, but that fund is separate. Then you ask the alumni to have a sinking fund. I'm working with University of Lagos on the fund. You have a sinking fund, or you work around PTA to have a fund, or you beg parents, please, if it's 50,000 you can pay it bit by bit. Of course, if they come in and you are a good manager, you can take that money. You know that it's for the whole term, but you don't need all the money, 50,000 that they are paying. This is how it works. Next term is end of for next term now, some people would have started paying you that money because they earn in months. By the time you leave parents to pay end of the beginning of the term, you will not get inflow. Then you will go to your bank and have a serious conversation. Loan me money, educational fund that is single digits, so that I can use it as operations for my working capital, any one period. If you are not deliberate, you will just work. One day you find out that it's closed down. They are beautiful businesses, but it's just the financial structure.
But how do we, okay, we're not a school, but how do we do sinking fund?
I didn't ask you to build a sinking fund. I was talking to you.
I know, I'm just.
Yours is not a sinking fund. Yours is you probably will talk to your banks to give you working capital. Now working, yeah, there are ODs. If you have a good bank, they don't charge you anything for, just use it and return. Do you know that? Yes, yes, they are there. No, they are there. No, I do. I get it. I have it.
But there's a little bit of interest, I think.
Some don't have interest, depending on the working relationship. Don't worry, we'll ask those to see if they will give us. I think Sterling has for their bill.
But what I know has a single digits.
Yes, even if it's that single digits, if you plug it into your financial analysis properly, you will find out that you will still breathe better than not having that shadow. Single digits is like you get it at 9% and below. 9.5%. BOI is not 5.
Don't bother about me.
No, bother about BOI. This is my. Don't worry, we'll talk to BOI, then that fund. At least you can get 2 million to 5 million at 9% on the direct. And if you're buying assets, did I say something wrong? And then there's BOI Lecon, who is also under BOI, that you can get assets. How far? We're almost done. Is Isaac here? Okay. Right. So the BOI Lecon, if you want to buy some assets, they can fund it. Then there's another one that we know, LAPO. LAPO has a microfinance for assets, right? For schools. Yes, school has money. Have you got an LSTTF educational fund? My school got. I helped them get to work with to educate. And this is under 5 million.
Yeah,
no, we got it, so I just ready for the documentation.
And if you're not owing NASA, the NISA will be.
NISA, we also know NISA. You are leaving. No, let's take pictures before you go. You can. I have to pick up too. We all want to pick up. Mommy is only today. Don't worry. Okay, so let's take pictures before we go. So everyone online, if you have questions, we'll take it in the next 5 minutes. We want to just take pictures quickly. Let's just take pictures. You were here. Who is taking the pictures? Where is Daniel? Where is Daniel? IQ. Sorry, it's hot. Come on, remove this table, IQ. You sure? I feel not showing. That's why I did not feel like showing that color. What I will not be like, I don't like this kind of picture.
It's fine.
That one. You are digital, but that one is make sure you capture that, remove that. Thank you. Regards to your request. So there's supposed to be lunch. If you need the guy on the way, just pick your own bag. All right, thanks for coming. Yeah. All right, thank you. Yes, when we're done. I'll take
Hello,
10
ma.
minutes.
Please, I have a question.
Anybody online for questions or we've lost them?
Yes, ma. I want to have a question.
Okay, go ahead. You have the floor. Ejiro.
Yes, ma. Good afternoon, ma. I must confess that I am
We can't
envious
hear
of you
you.
guys right now. Hello, ma. Can you hear me now? Can you hear me now, ma?
No, we can't hear you.
Can you hear me now? But I'm here. I don't know if anybody can hear me. Hello.
So the question
I can
is
hear you.
about
Maybe they cannot hear you from that place, from the end.
I hear
I
you.
understand
hear
that,
you.
but
They said they can't hear me on their own end.
Sorry, we can't hear you, Ejiro. Just a minute.
what would be your advice for a business that's actually just starting?
Let me check if it's on.
Stage like that. And if advice on a business that's just starting, preparing a financial projection.
Yeah.
Because the business is just starting, there's no data to work with.
You earn from them, right?
Yes.
So write down how much you earn, that's revenue. So people daily, monthly, weekly, anything.
Okay.
You are going to be running this business. Yeah. What are your projections for running the business? So you are in a good place right now. You are in a good place. Okay. So project into give us projection as if you started running the business or how you intend to run.
Thank you.
Yeah. Any other question in-house before we now settle for those coming out?
Sorry, but it's.
Okay.
Mine is more like a marketing and product. So I'm selling it for my markup, it doesn't make sense.
Okay.
Understand? So, but to be able to build customer loyalty, let them so.
Please use the
Got the same kind of process. I'm not depending on it in terms of taking care of myself at the moment.
Okay.
So we're just building up. I was the lady that
I
spoke
for
about.
my own.
Sorry.
Okay.
Okay, I was the lady that spoke about investing in machines.
Okay.
To what my business is.
Yeah, the one at the port.
Yes.
Oh, okay. Good to have you here.
So so we've been more like I had more maintaining the presence of my products in stores. So I supply a banner. The demand is actually there.
Yes.
You know, there's so much. So at times I'm operating one man. So at times intentionally I don't even go to the store to check up on my products because they're calling me madam supply, customers will call me.
Yeah.
But because I'm not, so I just maintain some stores with the keep on seeing my products there. So it's not necessarily I'm making profit like that.
All right. So what's the question?
So I was thinking about this same thing about how to put my.
Okay, but you're not getting.
So this are nice.
Okay, thank you, ma'am, and thanks for coming. Okay, any more questions so that we can move into office hours? All right, thank you. Online, I can take your questions now. Ejiro, are you still there?
Yes, ma, I'm still here, ma, but I don't know if anyone can hear me.
Yes, we can all hear you. We are here, so we can hear you.
Okay, ma, thank you so much for the opportunity. And I must confess I envy you all right now. I was supposed to be there today, but
No,
due
they
to
are
unforeseen
sweating. They're sweating.
circumstances.
You know, and Ejiro, you can't be envying us, so we are sweating. Our ACs aren't working.
No, but I don't mind, but at least I would have been in I would have been in the picture now. At least I would have taken picture.
Yes, so well, yes,
Okay, ma.
yes. All right.
No, I'll come again next time. I'm coming next week by God's grace.
Amen. We'll be at Microsoft's
Yeah.
office.
Oh, yes, I'll be there, ma. Okay, ma. So my question is because I kept having network glitches at some point while you were teaching, so I missed out on some key things you were saying while you were explaining the cash position and cash flow. So I've gotten that cash position clearly, where you mentioned that how much you have at hand. If you were to do something at the moment, do you have enough cash or liquidity to go for it? I've gotten that part clear, but I heard you mention something about grants, like if you were expecting grants. So where exactly does that fall into one? And then the second is you talked about cash flow being how that money flows within your organization, what exactly you do with it at some point. And you said there were three key areas: operations, investing activities, and financing. So I got the operations part, day-to-day activities, the investing part when you have maybe free cash flow and you just keep it somewhere to generate probably extra interest or cash. But the financing activities part, I didn't get that part clearly. So I don't know if you can just help me clarify too on that area.
Activities to have. So let me be sure the students got it. So somebody in-house will explain to you.
Okay, so okay, my name is Osal. I hope I'm correct. So the financing activity has to do with where the money is going. If, for example, money comes into the business, if you are paying back a loan, if you are paying salaries, just where the money that goes into that section of the business, paying back loans, putting money into paying salaries and I think they get it.
You are an accountant, right?
No, I try to do like accounting.
Oh, okay.
Okay, so to answer you exactly, so we learned that there are three channels where that are being serviced, either operations, investment, or financing. So for the financing, for example, if your business is owing, so the financing part is that for your profit, you use it to finance your debts. Then for the operations, you use to run operations of your office. Then for investment, probably you're going to bonds, you're going to treasury bills and all that.
Is that clear, Gio?
Okay, ma. So financing is mainly talking about debts. That's like whenever
Yes,
you owe.
but if you are using, what parts of your money in the business are you using to service your debts or financial obligations to investors or loan sharks? Money points, Kuda, if you are owing. So the other
Okay,
question is the grants, right? So I
Yes,
said
ma.
something about the grants. I said one that the grants, if you get grants into your business, it is not revenue. But I also said that grants are going to be disappearing from the streets because of Uncle Donald, Abi Baba Donald, and the Trumpers. So the USAID stuff, there's a lot of grants institutions that are linked to USAID, and USAID, they may not be, some are already closing down. So it's going to stifle access to funding in Nigeria and across emerging markets. That's my point. Did you get that?
Get grants, where does it fall?
So if you are a social impact, yeah, so that comes in as it's not revenue, because your revenue is running negative. as a full social impact. So it's investments that come into your things. It's investments. So under your cash flow, there is money out under investment, there is money in under investments.
When you are in for profits, but you have to get that.
It's still investments.
Investment.
It's not revenue. It's not money that the company utilized to at the end of the day and made extra from this. It's money that was given to either as equity, debts, or funds. So it's investments into the business. So the financials you will get, there will be space for money in. Money in under investments. Ejiro, is that clear?
Yes, yes, ma. So money in, that's investment into the business, as
Yeah.
that's grants. Okay, clearly, ma. Thank you very much.
Thank you. Any other person online still there? Any questions? Want to call it? Okay, my people, they are there. Go ahead, ma'am.
I think I thought asked that, but I didn't get what's the answer. The answer was given. For
We
a
can't
consulting
I think it's your network. We can't hear you.
business. For a consulting business, I just started. Can you hear me now?
No, ma'am. Oh, yeah. For a business that just started, yes. Sorry about that, ma'am. You can type the questions on drop it on the WhatsApp. We'll answer it. All right. Any other questions? So sorry, it's really bad. Sorry. Okay. Yeah, that's the final question for today. I want to ask, say best way to in the school industry. What's the best way to run the finance? The way the best schools are running. What's your advice to ensure that you don't really go into debt, ensures that your keeping is excellent? And then I think that's what I want. You must be deliberate about putting together your financial story around the business. You must be deliberate. So maybe put an accountant to it, whether external or internal, and then ensure that the right bookkeepings are done. And then when you need money, and maybe you have to get it out there to work on your cash flow, like I've said. But while we're working on your financials, we'll be able to establish what should work for you based on the questions you will answer. Yeah, but it's just to run it the way you need a sinking fund, by the way. You need parents to work with you. You need other income. That's the school. If your school, for example, has a good land, you can decide to build a hall, an events place.
Your parking lot.
Yeah, even your parking lot. It depends on the area. Yes. And other income to just help your cash flow. Yeah. So they can put canopies there and use, and they know that, okay, this school can use it, and churches too. Sort of means that your risk assessment of whatever you're doing is high, because you have children coming in the very next day. And to be very careful. So classrooms is a no-go area for them to enter, but the general area you can create if you have that space. If you don't have that space, you probably will be looking actively for grants. Lagos State has some funds around for schools. And banks to have.
Like Mastercard has some of those.
Everything. Yeah. No, they moved out of Koya. Koya, right? Mastercard has moved out of Yeah, because we don't know who is funding Mastercard. If it's US. All right, thank you, ladies and gentle ladies. It's been a day. Our officers continues for those that are in-house. If you are online, you could please, you still have my attention before the close of business today, which is around 5-6. All right, thank you so much, ladies. Thank you, everyone in the house. It was nice. Thank you so much. Thank you, thank you, thank you. So please manage us as we are. We apologize seriously for this. So we'll get a new set of cases. Because this or they have to work it and so thank you so much. Your testing, who is testing?
I enjoyed every bit of the in-house.
Thank you so much. Thank you, everyone online. See you on Wednesday, same time, 12 noon. Wednesday, all of us are online on Wednesday. We'll communicate the dates for the meeting at Microsoft. Yeah. Thank you and have a beautiful afternoon. Thank you very much. Okay. Sorry? Oh, okay. In this list, okay, so maybe we'll also think. Yeah, that is the outside, that's working, but because this one is, I don't know what happened. So it has now stopped the cross. Thank you so much. Thank you. Just manage. We have to give you, this is too. Thank you, Thank you. Don't worry, that's awesome.
Okay, I think someone asked question online on the chat box. For a consulting business just starting and has no cash yet, how does one go about the projection?
You should just type there, just assume the projections. Okay, so officer, I'll take a rest, and those of us that are still around. So apologies once again. Thank you. Well, that's other place so that it's stronger.
Going off right now. Yes, when she's ready.
You can come in. Okay, well, those are waiting for you. I'm not leaving. Please, this is hot.
No, I'm going to fix that. Thank you so much. It's nice to see the face. Yeah, no, thank you so much. Take care.
Okay, so hi everyone, people online. We are done for today, so we are going off right now. Thanks for joining. So we'll meet again on Wednesday by 12 p.m. Thank you so much.